In section 10-3, we're going to be introducing another new special journal for the cash receipts. So we're going to learn how to journalize in the cash receipts journal. So it's important that we use the cash receipts journal anytime we make a cash sale. So a cash sale is a sale in which the customer pays for the total amount at the time of the sale. So this is the easiest thing for us as accountants. If the people at the cash register make a sale and collect money at that time. Obviously, the alternative we know about, which is the accounts receivable concept, where we sell something and they pay us later. Cash sale, that is when we sell something and they pay us on the spot. In accounting, we talk about often paid with cash or received cash. Well, it's important to know that we're not talking about just dollar bills. If we receive cash and dollar bills, checks, credit card, debit card, doesn't matter. That is all considered to be cash brought into the business. So when we bring in actual cash, or anytime we charge a debit card or a credit card, we're using a point of sale terminal. So that you probably think of as a cash register. So point of sale terminal, that can be much more detailed than just a cash register and give us a lot of important data that we'll talk about here in a second. But a point of sale terminal you might think of as a cash register. At the end of the night, you can run a report called a terminal summary, and that's the information that we'll be using in this chapter. So here's an example of a terminal summary. This is a new source document for us. So the terminal summary will be labeled TS and then the number. So this terminal summary is printed at the end of the night for our company, 3 Green Products, and they printed off this report and it showed all of the credit card, the debit card, and the cash that was brought in. And this is important for a lot of reasons. Number one, we want to make sure that there's no fraud. So we want to make sure at the end of the night, the total amount of cash that we have in the register matches the amount according to our terminal summary. It's also important to keep track of how much is a debit card, credit card, just for our management's information. So a terminal summary, another word for that would be like a batch report. So that's at the end of the night. A terminal summary printed is called a batch report. And this could be as detailed or as not detailed as the company would like it to be. So when you do this at the end of the night, you might call this batching out. So this is the process of preparing a batch report from a terminal. So here we are again with the batch report for the day. So here we are with our cash receipts journal. So notice it's another special journal, and it has some special columns that we haven't seen. Accounts receivable credit. So this is when you decrease an accounts receivable account. Sales credit we've seen. Sales tax payable credit we've seen. Sales discount, that is something new. And then finally, cash debit. Anytime you're using this journal, you have to have a number in this column. It's called the cash receipts journal. So we need to receive cash, therefore debiting cash. A sales discount, just as you would expect, this is when we discount the price. So just like when we go to the store, if a rack is 20% off, if it's $100, you take 20% off of that, and then you would only pay $80. So here is our first transaction. This is when we record cash and credit card sales from a terminal summary. So at the end of the day, we printed off our terminal summary. This is terminal summary number 35. And it looks like we brought in $6,280, and that includes both tax and our sales. So cash, we brought in the total amount of cash, which includes both sales and sales tax payable. That sales tax payable came into our cash register, and every 3 months we will have to give that to the government, but for now, that money came in and we need to record it. So this is what this transaction will look like. Our date the same. Notice that we're using 3 special amount columns. So just like we've done in the past, we'll put a check mark indicating that we don't have any accounts that we need to write down. It's terminal summary. That is our source document. You do need to write TS for terminal summary because it is not specified. You'll notice in this journal it says doc number. So you do need to specify with letters what the source document is. Another check mark because there'll be nothing to post for this row. And then our 3 special amount columns. Notice the largest number goes into cash as a debit, and always our debits equal our credits. So our sales plus the sales tax gives us the total amount of cash. Now we are receiving cash on account. This means that someone owed us money and they're paying us. So we receive cash on account. So that's one tip, that we are recording a company name, so Edmonds Hospital, covering S448. There's another tip, covering sales invoice 448. So Edmonds Hospital owed us $2,516.80. So that is how much cash we received. And then we are also going to decrease their accounts receivable with a credit. So we have the date, Edmonds Hospital, receipt 610, so R610, credit accounts receivable, decreasing the amount that they owe, and then debiting cash because we received cash from Edmonds Hospital. Our last transaction, we are going to calculate a discount. So if a sale is for $1,450 and we give a 2% discount, $1,450 times 2%, our discount is $29. So we are taking $29 off the amount that they owe us. Received cash on account for Palmer Dentistry, $1,421, which includes $1,450 minus the 2% discount. So we want to keep track, Palmer Dentistry, because this was covering a sales invoice. They owed us money, now they're paying it. So we want to keep track of the customer's name, receipt 611. We want to decrease their accounts receivable by the original sales amount because that's how much they owed us, $1,450. So we want to be sure to decrease their account by that much so it shows they don't owe us anything anymore. Subtract our sales discount, and that is how much cash we actually received. So that is 10-3, recording transactions in the sales cash receipts journal.